Welcome to our comprehensive analysis of Hindalco Industries Ltd. as we look toward the 2026 horizon. Hindalco, the metals flagship of the Aditya Birla Group, stands as an industry colossus, not just in India, but globally. It is the world's largest aluminum rolling and recycling company and a major player in copper. For investors and professionals, understanding Hindalco requires looking beyond simple commodity prices and focusing on their integrated business model. They have strategically positioned themselves as a value-added player, moving away from the volatility of primary metal prices by focusing on downstream products. This transition is pivotal for its 2026 outlook. As we navigate through today's presentation, we will examine how their diversified portfolio, massive global footprint, and strategic capital allocation are setting the stage for significant wealth creation and market leadership in the coming years.
The crown jewel of Hindalco is undoubtedly Novalis, its wholly owned subsidiary. Novalis is the global leader in aluminum rolling and recycling, supplying major automotive and beverage can brands. One of its most impressive metrics is its sustainability lead. Currently, 61% of Novalis's total inputs come from recycled content. This circular economy approach isn't just about the environment, it's a massive competitive moat that lowers energy costs and reduces reliance on primary aluminum volatility. As we look toward 2026, Novalis is expanding its reach into the aerospace and EV sectors. The demand for lightweight materials is skyrocketing, and Novalis is capturing this growth through long-term contracts. Their ability to maintain a consistent EBITDA per ton despite global headwinds is a testament to their operational excellence and market dominance.
While Novalis dominates globally, Hindalco's domestic Indian operations are equally vital. Hindalco operates a fully integrated aluminum facility in India, covering everything from bauxite mining to alumina refining and smelting. This vertical integration ensures a low-cost structure, placing them in the first quartile of the global cost curve. Furthermore, their copper business is a significant cash generator. Hindalco operates one of the world's largest custom copper smelters at a single location in Dahej, India. As India's infrastructure boom continues and the transition to electric vehicles accelerates, the demand for copper, often called the metal of electrification, is projected to grow exponentially. Hindalco is perfectly positioned to capture this domestic demand, providing a stable earnings base that complements its international exposure.
Investors must pay close attention to Hindalco's financial discipline. The company has demonstrated a remarkable commitment to deleveraging its balance sheet. Their net debt to EBITDA ratio remains well below 1.5x, which is exceptionally healthy for a capital-intensive industry. This financial strength allows them to fund massive expansion projects through internal accruals rather than high-interest debt. Their revenue streams are diversified between the stable, contract-based Novalis business and the more LME-linked Indian operations. This provides a natural hedge against commodity price swings. By 2026, we expect their margins to further expand as higher-margin downstream projects in India, like the extrusions and flat-rolled products, come online. This capital discipline is a key driver for our positive long-term outlook on the stock.
Hindalco is currently in the midst of a significant capital expenditure cycle. The primary focus is the Bay Minette project in Alabama, a $4.1 billion investment by Novalis. This facility will be the first fully integrated aluminum mill built in the U.S. in over 40 years. It is designed to meet the surging demand for beverage cans and automotive sheets. In India, the company is investing heavily in downstream capacity, including a state-of-the-art copper e-waste recycling plant and aluminum extrusions for the rail and building sectors. These projects are scheduled to ramp up significantly by 2026. This isn't just growth for the sake of size. It is strategic growth, targeted at segments where Hindalco enjoys high bargaining power and superior margins, ensuring a high return on invested capital.
Environmental, social, and governance (ESG) factors are no longer optional for global investors. Hindalco is leading the charge in sustainable metallurgy. They have set an ambitious goal to achieve net zero carbon emissions by 2050. Their focus on the circular economy is evident in their 100% fly ash utilization and significant investments in renewable energy. Currently, they are integrating solar and wind power into their manufacturing units to reduce their carbon footprint. By 2026, these initiatives will likely lead to better ESG ratings, attracting a broader base of institutional investors. Furthermore, being a leader in recycled aluminum provides a significant green premium in the European and North American markets, where customers are willing to pay more for low-carbon products, further bolstering Hindalco's competitive advantage.
As we project toward 2026, several growth drivers stand out. These include the global push for lightweighting in transport, the expansion of the beverage packaging market, and India's massive infrastructure spending. However, we must also consider the risks: volatility in the London Metal Exchange (LME) prices, proactive hedging, and maintaining a flexible cost structure. For the savvy investor, these periods of volatility often present buying opportunities. The key takeaway is that Hindalco's 2026 outlook is underpinned by structural growth in aluminum and copper demand that far outweighs cyclical market noise. Their leadership in recycling and downstream products provides a safety net that most of their peers lack.
In conclusion, Hindalco Industries Ltd represents a compelling long-term investment opportunity. By 2026, the company will have significantly increased its high-margin capacity, solidified its position as a global ESG leader, and benefited from the structural tailwinds of the green energy transition. For professionals and wealth managers, Hindalco offers a unique combination of a defensive business model through Novelis and a high-growth play through its Indian operations. While the stock may face short-term pressures from global macroeconomic shifts, its fundamental strength, low leverage, and strategic growth projects make it a standout in the metals and mining sector. We believe that Hindalco's focus on capital discipline and the circular economy will drive superior shareholder returns through 2026 and beyond. Thank you for joining this strategic analysis of a global metals leader.